It's still your coach, Chidera, and I'll continue from where we start from our technical analysis. Yeah, we actually postponed the Saturday lecture because of some circumstances surrounding. So we are going to continue from where we stop on Friday tonight. All right. So as of last time, I remember we talked about the bull flag, the bear flag, and the copper handle pattern. And I want to take this time to thank and encourage those that have been practicing and sending some of their results to the group. And I I encourage you to keep improving, and time will tell when you know be able to do it perfectly. All right. So now today, where we're going to continue for today or tonight is the wage pattern. From the beginning, I remember talking about that we have two type of wage pattern, which is the rising wage and the falling wage. And we're going to start from one to the other. I will continue by sharing my screen. All right. All right. So the last time we talked about the bull flag, which is the flag pattern, the blue flag and the bear flag. We talk about the copper handle pattern, which is quite similar to your bull flag because the handle, which you use to make your entry is actually what a bull flag. All right, so the next on our list is the wage pattern. I'm going to start with the rising wage pattern. Definition says a rising wage is a chart pattern within a context of an uptrend composed of two upward sloping and converging trend line connecting a series of higher swings / pivot highs and higher swings / pivot lows. All right, a rising wage actually appear within the context of an uptrend, but bear it in mind, rule number one, a rising wage is a what? A bearish what? Pattern. A sell what? Pattern. All right. But it actually appears in the context of a what? Uptrend. So hereby you will say that a rising wage is what? A change of trend what? Pattern. So when you see a rising wage, a change of trend is what? Setting in. Because if it should appear in an uptrend, now the signal is telling you to what? Sell. So for you to sell means there has been what? A change of what? Trend. So them saying that it's composed of two upward slopey and converging trend line. This is what they mean. You know, upward slopey too. And converging means coming close to each other, but still what? Upward was slopey. So this is how the resistance and the support of a rising wage actually what? Looks like. So this is rule number two. All right. Rule number one is it's actually a change of trend pattern and appears in what? In the context of an uptrend. And rule number two is the trend line are upwards slopey and what? Converging to each other. All right. So what they are actually trying to say is that the market was going up, you know, and start forming highs and lows. And when connected, is actually what look like this. So the expectation is what? A breakout of the support, a retest, and what? A down movement. This is how a rising wage actually what looks like. So let the name not confuse you. But it's called the rising wage. You now think it's a buy pattern. No, all right, it's not a buy pattern. All right, why it's called the rising wage is because of the position of the wage is what? Upward. But what you are looking for is what? A sell entry. So when you see a rising wage forming, you're not looking for what? Buying or opportunity. Understand? You are looking for what? A sell opportunity. So which means if you start seeing a rising wage on a coin that you bought on spot or you longed on spot, you should start what? Exiting that what? Trade when you start seeing a rising what? Wage. Because the nearest expectancy is what? The breakout of the support to continue to start what? A bearish market. Are you guys getting it?
Yes. Yes.
All right. So background
Well,
says the
well
power
on
of
that.
the rising. Okay. Background says the power of a rising wage can be greater after a moderate upside move due to the possible decrease of underlying support as the pattern is formed. Rising wage can be stronger when the series of higher swing highs and higher swing lows that form the apex, sorry, that form the pattern narrows down into the point slash apex as bull become less interested. All right, forget their BB English. What they mean is that the more higher swings, highs and lows that is setting up that structure, the more it's closer to what the breakout of the support. So which means for you to start making your entry, you should start making your short entry afterwards this after the second what high. Because after this has formed, you can short from here. All right, and take profit as soon as take some profit partial as soon as you touch what the support. All right, you can also bounce again. By then you have moved your stop loss because you're taking what partial profit. So you might have moved your stop loss, let's say break even. Break even is putting your stop loss at same price of your entry or a little above the price of your what entry. That means you cannot get a loss if your stop loss is what hit. So it's like even if it's hit, you position yourself again when you touch what the support. Now another way to make an entry again is after they break out, they will test of that what broken support, which will actually serve as a resistance to the market, which brought back our rules. You sell at what resistance and you buy at what support. And if a support is broken, a new resistance is what formed. So at the retest of that broken support, that is now what a new resistance, and which also what identify a perfect price level to make what an entry. So note that for a retest, you need to also what see a rejection, because most times a retest can still break that what resistance and continue. So you need to see some confirmations, market reaction, showing you that man, that market doesn't want to cross over. You can be using your 15 minutes time frame to be seeing those rejections, like seeing what the market is actually acting at that particular zone. Exactly.
Yes, it is.
All right. So you can see you structure also shows here more likely of what I drew. You can see it. You can see it more likely. So they said technical analysts will use rising wage pattern as the beginning of selling opportunity, especially when in context with other tradable sell short setup. So what they're trying to say is that technical analysts will use rising wage pattern as the beginning of what selling opportunities when they start seeing other what bear what pattern. For example, inside this rising wage pattern, they now see a bear flag. Patterns also form inside what patterns. If you break down the what time frame, so you might be seeing a rising wage on 4 hours time frame. Then you now move to 1 hour time frame. Inside that rising wage, you are seeing clearly a bear flag, or you are seeing a bearish symmetrical triangle. So they are trying to tell you that when more bear patterns or sell setup or sell patterns appear inside the rising wage, it gives analysts odd in their favor. That means it's bringing the odd more closer towards their favor. So when you see bear pattern inside bear pattern, that should give you more confirmation that what bear was setting in. And knowing that rising wage is what a change of trend. So rising wage usually used to give high profit, because that's what we mean, that this trend is just starting. So you should expect a good movement down, having to join a trend when a trend has already what started. So let's say if the market have gone up to 60%, maybe the remaining uptrend is just 20% extra. So you just scoop something. But on a rising wedge, you are getting in as soon as the what trend is changing. So the breakout of that support is what the fully confirmed change of what trend. Is that understood? Understood.
No, please repeat,
Yes, sir.
please.
All right. Where are you confused? To repeat, where are you confused? All right. I say, technical analyst, which is you, which is me, which is all of us here, trying to analyze the market. That's who you call the technical analyst. Those people that are trying to use technical tools to analyze the market. So they use rising wedge pattern as the beginning of what selling opportunity. So rising wedge pattern shows them or tells them to start what positioning sell position or short what position. And when more sell patterns, there are more sell patterns like the Biari symmetrical triangle, like the Pierre flag. They are sell patterns. So once they appear inside the rising wedge, all right, it also give them more confirmation. This is what I mean. All right. This movement, in a chart, you can't see movement is not just straight like this. Do you understand? There are some certain movements, forming, blah, blah, blah. So when you start seeing maybe inside this from here, all right, from here to here, the movement from there, the sharp pattern that you see there was this. Let's say it goes up and you see something like this before you reach that what top. That's what a blue flag there. Let's say right here now, as it was trying to reverse, as it was trying to, let me show you. As it was trying to move from this zone towards the support, it now formed, it now creates a what? A bear flag to move, to make that movement. So when you see that bear flag forming, that shows you what? A more confirmation that you should what? Sell that market. So most times you're not compulsory that you might see a pattern. You might not even see a pattern. Let me also try to explain to you another with a structural example of my. I remember showing you guys blue flag, bear flag in People's USDT. All right, look at this. Look at this. I showed you guys that you can see that this particular place in this channel from here, remember from here to here or even here was actually what? A bear flag pattern. You can see that it was actually what? A bear flag pattern. Remember that this particular zone is a what? A sell zone. That's what? A resistance. And you can see that there was a bear flag pattern forming before at that point of what? Resistance. Confirming to you that you should what? Short this token. Are you guys trying to understand what I'm trying to explain?
Yes.
Yes.
So that's what they are trying to say. The same thing applies to what? The rising wedge. When you now see another bear pattern forming inside that rising wedge, give you more confirmation that you should what? Short that what? Token. Now remember what I told you guys at this people USDT. The last time we talked about it. I told you guys that I was expecting the breakout at this particular what? Zone. At this particular what? Sorry. At this particular what? Zone. But I now told you guys, I exited my trade at the reversal after seeing this one, bear flag. And the next reversal will be after it touched what? This what? Resistance. And what can you see here? Sorry, let me clean my chart. What can you see here? What is happening here? You can see as soon as it's touched that what? Resistance. What do you see? A bounce start to what? Happen. So it just everything just revolve around it. Like all this information just work mostly all the time. So you can see right now, I might have already positioned, if I have set my, let's say, buy limit at this zone, or maybe immediately touch, I just decide to what? Buy. And you can see the market, this is 4 hours time frame. And you can see the market is what kind of what reversing with some kind of what candlestick confirmation. So this is just what I was trying to explain on the rising wage. So the more you see more sell patterns or short patterns, or you can call it the bear patterns, the more confirmation. It's not just only on rising wage. You can also see it on what? On other patterns, even the bull flag, the bear flag, you can be seeing other patterns inside it too. All right. So when, for example, let's say you are seeing a short, you are seeing a bigger sell pattern, but inside that bigger sell pattern, the pattern close to you or forming inside it is actually what? A buy pattern. That's the confusion. So what I will tell you is to what? Wait for the confirmation break out. Do you understand? For example, you saw a bear flag, you saw a bull flag pattern, all right? And inside that bull flag pattern, the pattern that is currently forming inside it on a lower candle is actually what? A bear flag. That's kind of what it will bring confusion to you. So what you have to do is wait for the breakout to get your what confirmation. That is the breakout on the bigger what structure. So you need to come wait for the breakout. Since the smaller pattern is showing you an opposite, you should just wait for what confirmation. Is that understood?
Yes.
All right. So you can see a structural example that we have here. You can see we have, let me clean my own drawings. They are more like the same. All right, you can see the first high, the second high, the first low, the second low. So you can start making your entry from here, you know. And if you touch here, you close some, move your SL above your what? Entry. Okay, since you are shorting, it's below your entry. All I mean is put it where you will not get any loss. So you know when you're setting your stop loss on your Binance, it will show you whether you're getting loss or not. So that is in the way that you're not getting loss. That's what we mean by moving SL to break even. So if it should bounce, you will not end up getting it low because most times it can bounce and break this what resistance. All right. So that's why once you short or once you set your position before breakout, you should also what set stop loss. So if it's actually going to break, or invalidate itself, you'll not find yourself getting into what loss.
Loss.
All right. So you can see a structural example here, a live chart example. What do you have here? You can see their face. Let me clean my chart. You can see the first low here, the second low, the first high. You can see some other high. They didn't bring like their resistance close, but you can see the second high here. You can also see the third high here. So, and you can see after the breakout, there was a retest that was broken support, which will actually serve as what resistance. So just knowing that the best or perfect entry is at what at the retest. All right, is actually what at the retest. But why I actually used to provide means of making entry before breakout is so that you know miss out. Like for example, there might be most breakouts based on the force driving it might not even have a retest, and you might end up regretting not having to make an entry. So that's why I always provide ways you can make an entry to minimize what loss. Understood? So right now we are going to move over to our chart.
But this, sorry, sir. Question based on this one.
All right.
Well, I thought that this is uptrend. I thought you say it's up.
It's a cause in the context of an uptrend. But I told you that it is a sell pattern. All right. Okay. It's a change of trend pattern, which means changing the bullish pattern. So it's a change of trend pattern, which is changing the bullish trend to a bearish trend.
Bearish trend.
So that's why
because
I say
this one looks that it was going up. That's what I'm saying.
Yes, it's a change of trend pattern. If you heard me from the beginning, It's a change of trend pattern, and don't let the name confuse you. Rising wage have happened in an uptrend, but the pattern is a change of trend what pattern. So changing the bullish part to changing the bullish trend to what a bearish what trend. So that's it. Why the falling wage is an inverse of it. We will still get there. So let's look into our chart and try to identify some real life chart example. Going to how to switch. So 1 hour time frame. See if we can find one. All right. I think a rising wage even happened here. So let me connect my trend line and see for myself. Yeah. Yeah, this is a typical example of a rising wage. This is actually an example of what? A rising wage. If you look at both the support and the resistance are what? Upward what? Slopey and converging to each other. So they are trying to come close to each other by the end. If you look at the width from here and here are not what? The same. So they are what? Converging, coming close to each other while pointing what? Upward. And that's one of our rules. Another rules that we have here that also shows what is within the context of an uptrend. So if you look at it, the market was what coming up. It was what actually what going up before that what formation started. Our second rule has been what confirmed. Now, if you look at, there was a breakout. There was actually some retest, but the retest was not touching what the broken what support, which is now a new resistance. And what you see since then, the market has been what falling, which is what a change of trend. So this is why I say is actually a beginning of what a new trend. And if you actually see a rising wage, you usually used to give more profit. It used to be a long before BTC start falling from 69K, from 69K to 28K. That is as of 2020 or beginning of 2021. It forms a rising wage. I will visit it back and show you guys. And let's look at BTC USDT. It forms a rising wave, but not everybody was able to know that until it was late. So people that knows pattern very, very well would have seen, it's even still in my drawing itself. Look at it here. I still have, it's still in my chart. This was the date of this was February. Okay, 17 February 2021. This were 2021 time. You can see as the market market has been uptrend. This is a daily time frame. So you can imagine. So you can see it started forming that what rising wage. You can see it there. And see the trend line, both the support and resistance, which is this line and this line, are what converging to each other, an upward sloping. And see the first low, the first high, second low, second high. All right. Before you know it, a breakout, a retest occur, but not what in full. What else? Since then, market now fall from the price of 62K to what 30K. Imagine just a single rising wage that formed on a daily time frame fall BTC from 62K to 30K. That's more than minus 50% before the market start going up again. And every year, okay, this one, what I'm actually seeing here is a double top. the market form a double top. If I should go to a lower time frame, I might see a rising wedge. Let me check. Let me visit 4 hours time frame and see if I can. Although what I'm actually seeing is a double top, but let's see if we can find some rising wedge before that fall, because mostly used to form. You can still see some of our blue flag here. You can see our blue flag here. These are some of previous analysis. Some blue flag here. So you can, if you look at here, you can see there was a time I analyzed. Okay, this pattern is called the head and shoulder pattern. The inverted head and shoulder pattern. That was the pattern I was expecting after a breakout and a test what's happening. But before you know it, what took place was the bigger structure, which is the double top. That was really, really crazy and intense that time. It even created a bear flag. But most times you can be blind to check to patterns, not be able to, know it when it was coming. So for this one, what form there is a double top? What form there is a double top? So not a wish pattern, but the one I showed you guys previously, which is out of February 2021. I can't remember that day because the market fall rapidly. That was the time I saw some art even drop by 50%, minus 50% in 24 hours. So imagine expressing that kind of bear market. So this is how the wave pattern can be. It can be very disastrous and profitable at the same time. So depending on how you position yourself. All right. I hope you guys have understood the rising wage pattern very well now.
Yes.
Any question on rising wage pattern? Any question on rising wage pattern? All right. So the next one we have on our list is the falling wage pattern, which is actually an inverse of what? The rising wage. So a falling wage pattern appears in the context of what? A downtrend. So when the trend is trying to change from a downtrend to an uptrend, that's where you can find what? The rising wage. All right. So the rising wage switches the bear market to what? A bull market. So the definition says, sorry, I'm talking about the falling wage. Sorry. If the falling wage is a chart pattern within a context of a downtrend composed of two downward sloping and converging trend line, connecting a series of lower swing / pivot highs and lower swing / what? Pivot lows. Background. The power of a falling wage can be greater after a moderate downside move due to the possible techniques of overhead resistance as the pattern is formed. Falling wage can be stronger when the series of lower swing / pivot highs and lower swing / pivot lows that form the pattern narrow down into a point / apex as buyer become less interested in selling. So falling wage can be great because of what? It shows that people that are selling off are no more interested in what? Selling. You don't want to sell anymore. They are looking for what? Buy opportunity. And this is how a falling wage looks like. Remember the first rule says a falling wage is within a context of what? A downtrend. So the market must have been going down before a falling wage will what? Form. So, and they also say that it composes of two downward sloping and converging or trend line. This is what they mean. You see that two of them, both the support and resistance and what? Downward sloping, but converging to each other. So they're trying to say that the market was going down, going down like this. Now create the first low, first high, and the expectancy is what? The breakout, the retest, and what? Boom. This is what a falling wedge actually what mean. All right. They said that you can see an exemplary here. They say technical analysts will use falling wedge pattern as the beginning of buying opportunities, especially when in the context with other tradable buy setup. Just like I actually said, when you see patterns and another pattern inside the pattern, but are trying to identify the same direction, bring the closer to what your level. So when you see other buy setup, let's say you saw a blue flag or you saw a bullish symmetrical triangle inside the falling wedge, that's bring out your favor towards switch towards bullish and start looking for buying or opportunity. In addition, trader will often avoid further short-term opportunity when they occur in a context of what the following way. So what they're trying to say is that most especially when traders see a falling wedge, they avoid shorting any market, as in shorting that market. For example, you saw a falling wedge on BPUSDT. They avoid anything concerning what short on that market, rather start looking for what buying opportunity. And how do you make an entry in this trade? Just like others, you can place or buy at what the support. So remember that you're not going to be looking for sell opportunity, so you won't be needing to sell at what resistance. Rather, you'll be looking for opportunity at what the support to place a buy trade. So you can place a buy trade after the second what low. So which means after, let me clean up. After this has formed and this has formed, you can make your first entry here. Check some profit here. If the market break out, good for you. If you reverse, your stop loss must have been set, it will close, and you what make another entry at the touch of what support. So why, and as you're making those entries before breakout, you should also be setting your stop loss at what the same time. Like I said before, you can be setting your stop loss by percentage. Be like I can always go at 20%. So you set your stop loss, good to go. And not forget your risk management, low leverage, that you won't have to get into loss quick because of high leverage. So another way to make entry is after they break out, they retest and boom. So it's just an inverse of what you learned on the rising wedge pattern.
So question, please, based on this one that you taught now.
All right, come on, go on.
You say after the first low and second low, you are good
Yes.
to enter the market from the third low, right?
You can start making your entry at the third low.
At the third low. Then you say if the market retest and go high again small and get to the top high, you can take profit. What are you going to use? Are you going to be monitoring the market? Your eyes will be on your phone always. Or are you going to
Look at
do you understand me?
See, let me tell you something. If you're going to be a trader, you must monitor your position. All right. Most people will tell you, most people will be like, if you don't want to panic, you should just enter, set your stop loss, and leave that market. That's your choice of trade. Understand? You don't really want to stress yourself, so you just want to set it. People that used to do that used to set big stop loss. Do you understand? People that used to set their trade and leave the market, they used to set big stop loss so that it will not quickly hit. You understand? But the best is trend can change anytime. All right. And you wouldn't want to set big stop loss because you wouldn't want to incur huge loss just trying to make a penny. You understand that? So you just have to monitor it. When you are much safe is when the breakout is taking place. Even when the breakout is taking place, it can still bounce back. So when you're monitoring the market, understanding what the market is telling you, you can be making change of minds. All right. Let's say the market hit there is this the resistance, you can see the reaction and be like, man, it's going to reverse. You close some. See that? You close her. Then move your stop loss above your entry, which is break even. The market might not even hit your break even. It can what end up breaking out. But at least you position yourself in a safe side. So if you're going to be a full-time trader, that's the what we call a full-time trader. You'll be monitoring your market because your stop loss is going to be tight. Do you understand? Your stop loss is going to be tight. So even if it's hit, you also what find a way to get entry if you see the entry again.
Which means
Just
full-time trader does not have any other business. They do crypto as their business.
well, full-time trader does, for example, now, okay, if you're using 1 hour time frame, all right, you can be checking your trade after every 1 hour.
Okay.
Or after every 40 minutes to see how the candle is trying to close.
Okay.
Most people doesn't just like what I say. Most full-time traders, if you look at all these signal providers, all right, on some other view, you watch your stop loss, you will notice that our stop loss used to be huge. Yes, why they say those huge stop loss? Because they won't have time to making all those change of decision. You just want to, if it's going to hit, let it hit. But you as a beginner, you'll be scared of loss and you wouldn't want to get yourself into a huge loss. So what you do is when you start trading, you will find what is best for you. What I might be saying will not be what is best for you. You might end up deciding like, man, I can be accepting big losses. You understand that kind of thing. And decide that I can be accepting big losses and decide to set your stop loss and leave the market. So for you to do that, you have to be analyzing with what? Bigger time frames. All right. You can't be using lower time frames. You have to be analyzing with what? Bigger time frames, which you take what longer time to achieve your expectation. So you just set your stop loss and leave the market. Exactly.
What of take profit? TP.
You set your take profit normally now. You can set your take profit at any resistance that you see. For example, looking at this example they gave us here, I can decide to, where's my cursor? Okay, can decide to set my take profit here or here or here. Because I'm seeing what? I'm seeing resistance level at those what? Zones. I can decide to set them here, here, and here. So I can call this one my TP1, my TP2, and TP3. Exactly.
Exactly.
Yeah, that's clear.
So let's look at our real life example. Okay, can see a real life example here. The market was in the context of what? A downtrend. Created the first low, first high, second high, second low, and second what? High. You can see trying to what? Change the trend. The support and resistance and what? Downward sloping and converging to each other. Now a breakout took place. You can see the retest. And what do you see? The market right up. So we're going to try to find this in our real life chart. All right, we are going to try to find it and see if we can and speak because we don't have much time. We are looking for rising wedge. So that should be after a big fall and the market is about to go up. Might be hard to find. This one is a blue flag. It's very hard to find, Shy. Because most of them are replaced by other patterns. This one now is also an example of an inverted head and shoulder, which you get there. It comes with the first head, the shoulder, sorry, the left shoulder, the head, and the right shoulder break out bone. So you get there. So most of the reversal we are seeing here are not giving us the rising wage. So it will be a hard one to find one. Let me see. Find one.
Check on BMB.
Going to be a really hard one to find. Wow. This is a typical example of a head and shoulder pattern fully formed. You can see it was fully formed, but let's keep looking out for what we want. Okay. Let me see if I have one here. All right, this can be an example of one. Yeah. This can be an example of what? A falling wedge. Okay, if you look at it, comprises all our rules. First is in the context of a downtrend. Secondly, both the support and resistance are downward sloping and converging towards each other. If you watch the distance between here and here and here and here are not the same, so they are converging. They are coming close towards each other. Before you know it, a breakout took place. A breakout took place and a retest what took place, which is a perfect entry. And what do you see? Boom, 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 boom. So this is an exact example of what? A falling wedge. This is another inverted head and shoulder, fully formed. All right, guys, if I get to head and shoulder, remember BMB for me. For example, both the head and shoulder and inverted head, we have an example already here. So I will find it easier to identify. This is an inverted head and shoulder, and this is a head and shoulder, fully formed. All right, guys. Any question on falling wedge?
No, that's clear, coach.
All right.
Go ahead.
We have 10 minutes more. Let me see if you can do something with 10 minutes. All right. The next pattern we have on our list is the pullback pattern. A pullback pattern. So we have the pullback pattern, which is defined as a pullback is when a price action within a context of an uptrend traces an underlying price decline or retracement or correction from the peak of its leg. So this is what a pullback actually means. First is within a context of what? An uptrend with orderly price, without orderly price decline We can call it retracement, we can call it correction. So this is what it means. It's usually to have a support, which is upward or slopey, because it's an uptrend. So this is how it looks like. The market is going up, going up, going up, going up, and what? Retrace, which at a particular point, it bounces back again. It goes up, goes up, goes up, goes up, it retrace, which bounce back. This is what we call a bull pullback. So this trend line, which is the support, pulls the market what? Back to trend. So it goes up, boom. Goes up, boom. So whenever you touch it, it will bounce back. All right. So at this particular point, you are looking to buy at what? The touch of this support. So after this first one has formed, second one has formed, you can start what? Buying at the touch of what? This support. And when this support is broken, the trend has what? Changed. So which means at the time you are buying at this support, you should be looking at if a trend is forming, if a pattern is forming, a pattern of, for example, the rising wedge is forming, because a rising wedge can be forming, and because you are being blinded by the pullback pattern, you will not see when the rising wedge is what? Forming. So you should also be looking at, once you start seeing a rising wedge forming, you should abscond from what? Trading that pullback. All right. So except when you see that there are so many pullback, it keep happening, and it continue. But once you see a pattern, a rising wedge pattern, you should abscond and try looking out for what? Selling opportunity. Is that understood?
So how do you differentiate the two now?
You differentiate the two by when you connect. For example, on a rising wedge pattern, on a pullback pattern, when you try to connect the resistance, it's not connectable like it used to be. The top used to be jaga jaga. You understand? The top used to be jaga jaga. So maybe if you connect from here to here, the next one you connect will be like this. The next one you connect will be like this. Do you understand? But on a rising wedge, you're connecting the resistance. The resistance are very connected, but it will be like this. Do you understand that? Do you understand that?
Yes.
Yes,
So
yes.
on a rising wedge, you have to connect the resistance because it's connected. We are looking for what? Two highs. And when you connect that two highs, it will be what? Upward, slopey, and converging to what? To support. But on a bull pullback, the resistance is not what? Connectable. Even if you connect it, it doesn't show you any structure or any clear word structure. It can be showing you just an upward channel. It can be just showing you an upward channel, which is which is still what? A bull pattern or a bullish pattern. But once a rising will start to form, if you connect this resistance, it will not be like, let's say, for example, let me just make it smaller so you see it clearly. Let's say the market was going up, boom, boom. You come again, you touch again, you touch again, touch again. Now at this particular point, you start getting, Now if you now watch, if you connect here, from here, these three ones, let me connect this way. These three ones, this one, this, and this, you can see a rising wedge here. But if you connect here to here, it's not what? A rising wedge because they are not converging. Do you understand that?
Yeah.
Please, will you repeat again?
I said, if you look at from here, this particular zone, this one and this one, when you connect the resistance, it is converging towards the support. That is, if the end is coming closer to support. All
Which
right.
is
But if you are
pullback.
connecting from here, You see?
Which is pullback now.
From here, look at this. From here, it's actually what? A pullback. But at this particular point, I'm talking about this point, it started from a rising wedge here. Because when you connect the trend line at the resistance, you will see what? It is converging to each other. So this is where you now differentiate it from what? A pullback pattern. Are you getting that?
This one is parallel. This one is converging.
Exactly.
Okay, yeah.
When it's
That's
doing a
clear.
pullback, it can be parallel or cannot even be connectable. But when it start being a rising wedge, it's now what? Start being what? Converging to what? Each other. It is now when you start what? You stop buying or stop looking for what? Buying opportunity and start looking for what? A selling opportunity. Is that understood?
Yeah, that's clear now.
You mean in
Yes,
pullback
clear.
we sell? Sorry.
No, I said in pullback pattern, you buy
now.
here,
Okay.
you buy here, you buy here.
Okay.
But I'm trying to say that at the same time, watch out if a rising wedge is forming, which I just show you an example of how it could happen.
Okay, good. Okay.
Do you get that?
Okay.
So that's why I say when you are doing it, also be watching out if a rising wedge is forming. So, but the earlier you detect it, the better for you not to make what? A mistake. You understand? Because once you detect a rising wedge forming, you now have to stop buying what at the support and start looking for opportunity to sell at the what resistance. Cleared?
Exactly.
All right. So let's look at the example that we have here. Okay. You can see the example they gave us, and you can see what I'm trying to say. The market was going up. If you pull back at a particular trend line, it bounced off. You can see after this and this, you connected, you can start buying here, can buy what? Here. All right. And like I said, if you look at the top, most times it cannot be connectable, or if you connect it, it will not be a rising wedge. It can be what? Parallel, or it can be like this. Yes, sir. It can be more up, like wide, making it what? Wide. That's how it used to look like. But once you start seeing it being converging, so let me clean this. Once you start seeing it being converging, let's say, but you see someone when you connected it, the line now became like this. That means you should start what? Buying. The market is trying to converge and forming what? A rising wedge. That was what I was trying to explain. I was trying to make an awareness so that you guys will not make a mistake when trading. So if you look at the examples that we have here, you can also see that what I'm trying to say. You can see it, go back, you keep on what? Bouncing. So let's look for an example before we end the session for tonight. Let's see if we can find one.
So can you use Matic USDT for an example, a real life situation?
You see?
Can you use Matic? Can you use Matic and USDT for an example?
All right, on that.
Matic, yeah.
I love using Binance. All right. Matic is even at my support line itself. All right. This is kind of another pattern, yeah. Well, it's been long I even look at Matic. I'm even surprised to see that these lines have been respected. Like, seriously? Look at that. You can see it's currently at what? At the support, sitting at the what? The support. So the only powerful thing you can see that can happen here is what? A bounce or the breakout of that what? Support. That's the two possible things that can what? Happen here. But based on what I'm seeing good rejections that should bounce that market. can see that very clearly, yeah. All right, but let's look out for the one of a pullback. Let's see if we can find one here. All right, let me go. I've seen one already. Can be easily found on an uptrend. Let's start from here. We connected. You can see that. You can see that. This is an example of what? A pull. Let me move to a higher time frame so that can be more. So let me move to 2 hours time frame. All right. Let me move to 4 hours so you can be still more bold. All right, this is bold. Now, what you can see exemplary of what? A bull pullback. All this thing that happened here is what? An uptrend. All right. Now, a bull pullback is after this has formed, these are formed, and you see it's bouncing at that trend line. What are you seeing? Remember that trend line is touched, it bounced back. Most time when it bounced back, you see the connection like is not always similar. When you connect it, it can be up, it can be figure like, but what you're looking at is what for it to bounce at that trend line. So most times you don't just buy whenever you touch. You wait for what? Confirmation. Let's say candlestick for confirmation or a good a rejection. If you look closely, you can see that there used to be what? Good rejections at that particular zone before they bounce. You can see this here, can see this one too, can see this one too, can also see these ones too. But before now, what? A breakout. And after the breakout, you can see what? The retest for the market what? Drop. Or whatever anything that will continue to what? Happen. So this is just a typical example of a pullback. Thank you for the person that recommended Matic. I think you were able to see it already. That was why you said I should use it, right?
Yes. Thank you.
That was a good spotting. And that was a good improvement. I can see you guys are really improving. So this is just a full typical example of a bull pullback. So from tomorrow, we will continue with the bear pullback, and then move towards the double top, the double bottom, and the double top pattern, which is the W pattern and the M pattern. So this is where we are going to call the class. This one more chance for question. If you have a question, you can ask now before we conclude. Any question? All right. Since no question, we call it a closure. Thank you guys for today's class. See you guys tomorrow.
All right, good night, coach.
Thank you, sir.
Good night.